Good morning. This is Ken Long at Tortoise Capital with a review of the weekend trading report for June 11th, 2016. The market has crept into bullish quiet conditions. On an annual basis, using weekly RSI 14, we're at 60 out of 100, so the upper half of neutral. On a 10-day basis, using the 10-day NDX, we are at 33 out of 100 at the lower end of neutral. In the market mosaic, price with respect to the 200-day moving average is green bullish. The slope of the 50-day moving average is white bullish. And the trendiness of the market is at 20.7, so neutral but bulls in charge. The risk index is the 30-period moving average of the VIX divided by the 10-period. The threshold between risk on and risk off is 1.0. The current reading is at 1.013. So we're at risk on. We take that score, look to the last 5,000 trading days and find the average and standard deviation, and then compute the risk Z, which is at 0.07. Here's a 90-day histogram of that indicator. Notice we've had a successful double bottom held here at minus 0.5 SDs below average. Moved to a plus 0.5 in the last 3 or 4 days. It has pulled back to the baseline. This puts the market at a critical state for volatility. In fact, there was a 9% loss in the inverse VIX on Friday, so that bodes for a potential sharp volatility event next week. Would not be surprised to see that lead to more channeling price action here as we get deeper into the political season in the summertime, and with some unfortunate news events over the weekend. So I'm expecting more volatility ahead. But we'll see. There's room for a long period of quietude here to extend that bull quiet. But there's also the opportunity here for a sharp downward spike, which would be triggered by a volatility event. So this favors slightly the long side, but we will be paying attention to shorter term potentials. See the holdings for the blended monthly rebalancing. Next reevaluation is due on or about 1 July. And then these are the current leaders among the ETFs based on the price action on Friday. ETF 2 remains at 100% exposed in the asset allocation model, and the model portfolio is also at 100% exposed. No real significant changes in the blended monthly rebalancing portfolios, maybe with the exception of U.S. real estate creeping back up to the top, along with treasuries. There were some retracements this week, but everything is on a buy in both the 13 and the 32 ETFs. In ETF Max, powerful moves here in the precious metals. You see them all having exceptional one-week performances. And also in sugar total return, and then give backs in the energy areas here. You see, notice them in the red. Brazil remains a strong mover here. Had a nice rebound this week among Brazil consumers. The S&P 500. Just want you to notice these losses here in the energy sector. Now, so Southwestern Energy up 85% over the last 3 months, but gave back 15% this past week. So between that one and Consul Energy, there's and NRG Energy, you have this notion of from extreme conditions come extreme results. And so these are all postured for either a resumption of the previous strong trend or further breakdown. In either case, you're likely to see large relative volatile moves on those, and so that's going to favor shorter term trading on behalf of our day traders. Back in the market health check here, These vertical blue lines are 10, 20, and 30 days worth of look back. And here's the 60-day look back period. And you can see that the 10-period regression channel and the 30-period regression channel in black are both pointed up. The dragon is sloping up and on the north shore of the river, but starting to get flat. Based on this, it'll pull back in the last couple days. The slope value, the moving slope value of that 30-period regression line is this sine wave. You notice it had climbed as high as 0.7, which is well outside the boundary of 0.4. Anything steeper than 0.4 is exceptionally steep. Anything weaker than minus 0.22 is exceptionally weak. I'm sorry, above 0.4 is exceptionally strong. And so we had, during this period here, the slope of the 30-period regression line was steeply up, and then it decayed back to the 0 line, which is here. So in this whole period, it went from extremely steep to, by this time, perfectly flat. It dipped slightly and now has regained a positive slope and is now up here around 0.25. So this is more like a normal grinding upward bull. And so there's reasons still to be cautiously optimistic here. We have a good support level. You can see on the belly of the dragon was flat and held here at the bottom of the river and the floodplain. And it made a new high, and we're very close to testing the swing high up around 213. However, as I've been saying for most of this year, the political shenanigans and the consequences for the choices that we make as a nation are going to be extreme here. And so I would be less surprised if we continue this sideways chop as the political games unfold, as opposed to either a strong upward move or a strong downward move. If anything, I'm favoring the probability of a choppier sideways market with a slightly downward bias until we find out a little more. We won't know really until November. It's going to be that kind of an election. It's so polarizing. So that's where we stand right now. I'm in profit preservation mode from the gains from this little move here off the support level at 204. And I'm playing very short-term time horizons and cashing them when I get them, as opposed to having strong belief in the longer-term trends here. Everything less IEV is in the green for the moving average filter. This should read 90%. I just noticed 90% invested, 0% cash, because of that one position here that's in cash, and we'll make that correction next week. The S&P sectors are all starting to lag now, but the strength is in defensive plays like utility, energy, and materials. In the world market model, being dominated by silver, gold, oil, and commodities, everything Asia basically is below average except for India and the Philippines. All the large caps in the U.S. are below average. Only the mid caps and selected small caps are doing well. Latin American emerging markets below average. Brazil, Canada above average. And everything Europe basically in hurt locker. Top 30 ETFs really favoring all of the commodities and materials and the real property kinds of things. And Brazil remains on the top, but because it's white and green, it's losing a little bit of steam. And then the give backs in the energy sector took some of the steam out of Russia here. You notice it is also white and green, as is the Goldman Sachs Commodity Index, white and green. In the Dow 30, we're looking for, there's leadership in Pfizer, ExxonMobil, United Health remains at the top, and 5 down here in the red for the deep value plays, GE, Microsoft, Disney, Apple, Nike. Shifting to the daily report, plenty of channeling and overreaction signals to choose from. A handful of dojis. We got JP Morgan and Home Depot on channeling, JP Morgan on overreaction. 4 different 5-day downs to choose from, a couple 551Ws, and some good ratios here on the auto framer, and plenty of frog quality numbers to choose from. So there's quite a few of the shorter term trade setups that we favor in place, so we can be selective and judicious. Among the ETFs, some channeling and overreaction. You got a triple screen here in oil, good frog quality numbers to choose from, a handful of single digit RSI2s, and this is really the one I want to draw your attention to, that sharp sell-off here in XIV, which set up the gains in VXX, down 9% on Friday, going into the weekend. Some good choices here among the auto framer and the regression line fractal. These in the top shelf are the ones that are the most ATRs below their own long-term fair value. We treat the regression line at 270 as a long-term fair value. And in the red, the bottom shelf, these are the ones that are like the relative strength leaders, the ones that are the most ATRs above that long-term fair value of the RL270. So IBM is almost 11 ATRs above its long-term fair value. This is an example of IBM being one of those top shelf relative strength leaders that's multiple ATRs above its own upwardly trending RL270. So when we see things on a swing basis being below their RL270, crossing the 270, and then maintaining that move, this becomes an ideal place to get long, and we consider that to be a change of regime. And then when the river crosses that RL270, we now have further evidence that that long-term trend is now in place. That enables you to get into trends at an earlier basis. All right, so we'll also take a look at Walmart and Pfizer just as additional points of reference. So Walmart and Pfizer. This is Pfizer. You can see this is actually part of the swings that we were making back in April with that first trade, and then continuation patterns that have kept us back into that trade here. That's Pfizer. And Walmart, you can see, has made quite a move from its sell-off up to a enormous value above its RL270. So when you see those kinds of swings in the RL270, you get this huge sell-off in Walmart, and then when that regime change turns, when the river crosses to the other side of the 270, you have reasons to change your view of the overall direction. And then when you have a long side bias like this, and you see these extremely adverse moves with the long tails, they look like bottoming tails in creating value opportunities to get back long. We'll take a look at the deep value plays. We'll look at Nike and McDonald's just to give you the alternative view, catching things on the other side of their business cycle, as it were. So we'll look at Nike and McDonald's. All right, so here's Nike. It was in a positive move, and so again, when the river crosses that 270, you're allowed to adopt a downward bias. Now as we look at this a little closer, we're now almost ready to look into an owl pattern, an owl bottoming pattern here, and then the RL270 becomes the price target on the upside, sort of a long-term reversion to mean. So I actually like this on the long side. And then McDonald's, you can see we've had 2 short positions in this one already. We're a good distance away from the RL270. This looks like a good place to cover. We're getting ready for it. We got an RLCO outside the river. As soon as that RL30 rolls up, this becomes an owl pattern on the long side with the RL270 as the upward target. That's if we were framing this for the long side. For the short side, at a minimum, we have to be short not later than 120. So we're right now in a like a yellow zone, waiting to see what may see. I wouldn't disagree with this price here to be an entry on the long side, with a target of at least the bottom of the pocket, and then the swing high, and then the RL270, setting up reasonable price targets to the upside. So very favorable reward to risk ratios. So that's how we use that regression line fractal framework to do quick framing of interesting symbols with respect to price compared to their long-term estimate of fair value. And that's how we use the RL270 and the river as a way to get a rapid estimate of directional bias. Okay, back to the daily report. These are some squeezes. These are all set up for one-day pops. It takes a range compression of less than 0.7 of the average range, and then a relatively large range stat compared to that risk to make this chart. So let's take a look at Home Depot and Apple. Okay, you can see in Apple here that we've had a very narrow range compression here, so a tight range risk, and at the same time Apple has the potential for these kinds of moves. So you're seeing a Bollinger Band pinch, a really pinch of the dragon resting at the top of the river, the RL10 rolling up, the river rolling up, some positive value built in here because of the dragon on the north and the river now on the north side of the RL270. That could have been the first move up, finding support, first buying pressure surge, sell off, but then held and failed to fail further. So I really like this one on a one-day pop. If it gets above 99.60, then I would think it could get up here to 102 on this kind of a move. If we saw that kind of a move, we would certainly lock in that big gain. But even if we get some of these other $3, $4 moves, that presents a lucrative target intraday. You get a couple of those in a row, and then you have earned money intraday to build that swing position for this kind of a swing. And this is well postured for exactly that kind of a move. Home Depot's on the other end of the business cycle. You can see the river is below the RL270 and drifting downward. Had a relatively tight range on Friday, but this is one where I'd be short around 128.25. There's time yet to get long on this one. It doesn't even resemble the beginnings of an owl, because you have it testing a double bottom here. So this is one where I'm inclined to take that position on the short side, and then you can get some large range days down intraday like this one, and this one, where you can make bank just on the intraday short. Okay, back to the daily report. Just taking a look here at some of the additional charts. The z-scores of the regression line slopes and the price relative to the dragon. I like that it's holding the upper shore. It finds support here and support here and support there and there. It's postured to make a run, but at the same time, in my view, the more likely case is a retest of the bottom of the river to a 5 and more of the sideways chop kind of action like we had over here, because of the proximity to the elections coming up and the long hot summer and crazy news stories. The RL90 is rolled over, the 10 is pulled back to the mean, the 30 is at the top of the channel. So this is a natural place to digest these gains. So I have a shorter time horizon than in an ordinary bull quiet type of a market. And that's everything I wanted to cover. The ideas behind the swing patterns we showed are fully documented and discussed with many management examples in over 50 hours of recorded videos for our online advanced swing course, which is available to be taken now and as a home study course at your pace, with access to the educational materials for as long as you need it. So if you're interested in that one, or the advanced day trading course, which finishes up today, but where we've recorded again over 50 hours of trading education and managed trades, just please get in contact with me and we'll get you set up. So, Ken Long from Tortoise Capital. Keep your risk measure and your powder dry.